We have produced reports. We have worked with G20 in producing the kind of framework for further consideration to draw up policies that would address the issues of tracking and trying to limit the kind of damaging financialization of the commodity sectors. And there are evidences in this report to demonstrate the kind of correlation between the movements in the commodity markets with equity markets, with foreign exchange, some currencies that were not there before, but are there now, and it's mainly driven by the financial managers who come into the commodity markets and invest in indexes mainly for their financial gains and not actually to hedge their positions at all. There are some very, I think, concrete and I would say much needed regulatory measures that this report has proposed. For example, in the area of greater transparency in the information in fiscal market, so that we would know, for example, the area of stock holding, how much certain commodities are being held in terms of stock, in areas like spare capacity. We need some of this information, which are not always available in the commodities market. We also need more information, particularly so in the areas of derivatives, because of the over-the-counter trading system. There's been a lack of real access to information, particularly in the commodity derivatives market. This report also recommends that we may need to have some tighter regulation, particularly to be imposed upon the financial the market participants, the financial managers. For example, the limit on their position, and which can help to reduce the bubbles in the market. And from time to time, if it needs be, there is also a recommendation that supervisory authorities might need to step in to be able to intervene in exchange trading, so that we can avoid some price collapse or avoid some price bubbles.
We still have not done the kind of re-regulation that is necessary. We have not done the re-regulation. If you look at today's markets, what happens in the equities markets of the world in the last 3 weeks, they're collapsing. What happens in the commodity markets is the same. Is suddenly demand for oil disappeared in the world. It's not true. The industrial production is at least flat. It has not collapsed. But the price for oil goes down, and the price for other commodities equally go down. At the same time, over exactly the same period, starting with the same day as the equities went down. So what is it just coincidence? Is it that somewhere supply and demand behaved in a way that it happened exactly at the same day? It's ridiculous. It's ridiculous. But we're not willing to take it. But we're not willing to understand it, or no, we're not willing even to let it come to our brains. We are ignoring it. It is ignored, explicitly ignored.